Hi everybody, we are going to start talking about the master budget. In order to do a full-fledged master budget, you will need Excel. But in exams like CPA exam or your midterm or final, what you are going to find is these types of questions where they are asking bits and pieces of information. The way it works is you are going to start with sales. And in the example, we are given sales units that we are predicting. And what we want to do is maintain an ending inventory of 10% for each month for next month's sales. And the reason for that is usually to make sure that there is some buffer. For example, from April to May, there is some buffer for May in case something goes wrong with the production. You still have some inventory to sell at the beginning of May. And the question is, how many units should be produced in May? So from sales budget, we are going one layer down to production budget. We obviously need to produce 4,000 units in May. That is for sure. But we also need to produce 10% of next month's sale. So I need to produce 10% of these guys, again, for buffer purposes. And then there is a minus 10% of 4,000. Why is that? Because in April, I should have produced 10% of May sales to be on the safe side. So that's why we are taking this part out. We already produced a fraction of May sales in April. So it turns out the number of units we need to produce is 4,100 units. Again, number of units we need to sell in May, 10% buffer for June, and then whatever we produce in April for May. Now we are going to look at cash budget, specifically cash income from sales. And we have sales units. Again, what we are given is the same sales units. The sales price is $10. And we are given our company's credit policy, or how we are collecting sales. 70% of sales is collected on current month. So 70% of May sales is going to be collected in May. 29% is going to be collected next month. So 29% of May sales is going to be collected in June. And 1% is bad debt, it's not collectible. So let's calculate how much money we are going to collect in May. It is 70% of May sales. This is units, this is price per unit. So the multiplication gives us sales. 70% of it is in May. 29% of April sales is going to be collected in May. So it's going to be 29% times 3,000 units times 10. So cash collected in May turns out to be $36,700. Another piece of information that we will need eventually when we are calculating our cash inflows and cash outflows. Now, we are going to look at the same problem with another example where we are going to look at specifically the production figure. It's partially taken from the sales figure, and we are making some assumptions based on how much we are going to expecting to sell in July and what was the expected sales in March, etc. But production is kind of given in this problem, and we need to produce 3,200 in April, 4,100 in May, and 5,100 in June. So again, coming from sales with some assumptions based on July and March. Now, this is our production budget, and what we are trying to do is at the end of each month, we are trying to keep 20% of raw materials. Why is that the case? Because we want to have enough raw materials next month to make sure that we have a smooth transition and continue producing the products. And what is also given is each unit requires 10 pounds of raw materials. Now, we are trying to calculate budgeted purchases in pounds in weight first before we do the dollar amount for May. Now, for May, I'm going to produce 4,100 units that I calculated, and it's also given here, right? Times 10 pounds per unit. It's given here. Now I'm calculating everything in pounds. And then I need to purchase 5,100 times 10 units multiplied by 10 pounds per unit, and I need to purchase 20% of it so that I have enough material to start the month of June. Minus what I did in April basically was I purchased 20% of my May production in April to be on the safe side. So I need to take that out. Net, the raw material purchases turns out to be 43,000 pounds in this case. I'm going to stop right here, and in the next problem we are going to continue giving you some more assumptions to finally calculate cash inflows and cash outflows. But this is usually what happens when you have some pieces of information and you're trying to calculate eventually the May budget, and specifically cash inflows and cash outflows.